In our opinion, infrastructure is the best equity asset class from the perspective of direct formulaic inflation linkage. There are two broad mechanisms that exist in our space. One is that concessions or contracts can include a mechanism that directly links the price of the service to inflation. Good example here are toll roads or European cell phone towers that often have their prices adjusted by a formula that includes inflation. Or there are some utilities with regulation that adjusts the company's asset base on which they are remunerated by inflation. This is more common, for instance, within European regulated utilities. I would note that in all of these cases, the formula is driven by actual inflation as opposed to a fixed rent riser, which, while very powerful, does not actually change with observed inflation. I think the key focus for investors needs to be the net present value created by the investments made by their company's managements. So to the extent the investments are creating positive risk-adjusted returns over the long term, then the stock prices should reflect that increased value over time. Just participating in energy transition is not enough. Detailed analysis of existing investments, as well as future investments and the cash flows that those will generate, should be the key drivers of future returns. So the confluence of higher long-term interest rates and substantial inflation has led to a meaningful reality check in the space. Based on our experience and analysis, the green investment bubble that seems to have existed in late 2021 does look to be behind us. However, the key is what happens next. As I discussed earlier, the opportunities for investment will be enormous, but the winners and losers will likely be determined by those companies who maintain capital allocation discipline and do not just grow for growth's sake. We are attracted to companies that will produce stable and growing cash flows over time. If their assets include inflation linkage, all the better. Finally, we like to find those names that have those characteristics, but are also trading at a reasonable valuation relative to the future cash flow we expect them to generate. Fortunately, the market tends to overreact to short-term fundamentals, so we are often given opportunities to invest in great long-term franchises that may be out of favor in the near term.